So good morning, everyone joining this webinar. We will be talking about financing your homeownership goals. My name is Toyosi, and I have it with me, Denise Cousineau from Dean Bank. I work with buyers, sellers, investors in Rhode Island and Massachusetts. I'm licensed in both places. So that's a little bit about me. Real estate agents, when we're working with clients, it's a personal journey. We want to be part of our client stories. And for us, it's like ensuring that people get the support that they need. And so Denise is just has been amazing. So that's a little bit about me. Questions do you have about homeownership goals? You can put that in the chat and then we'll just make sure we address it towards the end. So I'm going to just share a little bit about the current market trends. We had a very harsh winter, but even with that winter, people were still buying. So in 2026 only, 8,048 homes have been sold so far. So which is telling us that in Massachusetts, buyers are still active even in the current market. One thing though is that median days on market is up from previous periods, which means that homes are staying longer on the market this year compared to previous years. And as of last night, when I pulled the data, there are 7,754 homes that are active, on the market to be sold. So there are homes out there for people that are interested, ready to buy. We have 3,413 condos. We have 41 single family homes. And essentially, this is telling buyers that there are more inventory options and stronger negotiating powers.
In the Toyosi, that was Massachusetts?
Correct. This is for Massachusetts only. Yes.
And that's a good sign that the houses were on the market longer.
Right. Yeah. So usually when houses are on the market longer, it means that buyers have more leverage. So, if sellers are their home on the market and at some point they're like, I just want to get this home sold. It could be they are moving out of state or they are upsizing, going to a bigger house or even downsizing, and they've already put in an offer on another home. So, this is giving buyers more power in the market. So again, this session today is about financing homeownership goals, and Denise will be speaking more about this. But I just wanted to give a high level overview of what the steps to buying a home is. I have covered this in the previous session, and I usually have first time home buyers seminar where we go in depth into this. But for today, this is just a high level. So typically, when one wants to buy a home, I know people sometimes like to just go online and say, oh, let me check what's in there. But we always recommend you first want to speak with an agent to really understand what's your even what are you looking for? Are you ready? And then you want to get pre-approved because it's fun to go on Redfin and say, oh, I want to search for these homes. But if you go to an open house and you're not pre-approved, you won't be taken seriously because you don't even know what you can afford if you're not pre-approved. And then afterwards, after getting pre-approved, which is getting funded, which is getting, high level, oh, okay, you could potentially buy this home that is worth this price. You then find a home and then you and an agent work to make an offer, negotiate. If your offer is accepted, you get your home inspected, you negotiate repairs. And then there's a lot of other things that go in between this, but at a high level, this is pretty much what happens. And then when your home is inspected, you have a signed contract, you get approved for the financing, and then over time you close to become the homeowner. So this is the high level, if someone is thinking of buying a home, what are the 6 high level items that will be covered? This is included. So we're going to pass it on to Denise now to tell us more about the grant programs that are offered by Dean Bank in partnership with the FHLB. Denise, take it away.
Yeah, so we are a proud partner lender with the Federal Home Loan Bank of Boston, and every year they come out with grant programs, and there's 3 different programs this year, and I think I'll get into more detail when I hit that section of the PowerPoint, but only approved banks can be partner lenders and offer these grant programs. And again, same as Toyosi, I'm going to just do a very high level overview of the process. This is our agenda that you can kind of follow and go through as I go through the screens. So we like to offer first-time homebuyer solutions to our customers. You'd basically meet with me and we would review, you know, kind of like what we did with you, Rosilia, where you're looking to buy, type of home, what down payment monies you have, and basically kind of drill down to what you can afford. This slide explains we have a nice program. It's called a down payment accelerator account. So it's basically a high yielding savings account, and it's paying right now 4%. And it's compounded, paid monthly, no minimum deposit to open, but it affords you to kind of put some money in and start saving towards your goal for down payment funds. And there are some restrictions on it, but if you have your funds in there and you're making periodic deposits and transfers into the account, at the end, you could receive a closing cost credit of $1,000 when you complete the program and your mortgage closes. So this is kind of one little slice of a program offering from Dean Bank to help you save for your down payment. These are some products and programs, and this is where I'm going to get into some of the grant information. We have conventional, fixed, adjustable, and portfolio loan programs. So fixed rate is exactly how it's stated. It's a fixed, your rate is fixed for 30 years, 15 years. It's a fixed amount of time. Adjustable arms are you're fixed for maybe 5 to 7 years, and then your loan rate would adjust yearly after that. We have portfolio programs when we're offering special, maybe first-time home buyer rates. They change and vary from time to time. So the grant programs, there's 3 grant programs that are out right now. One is the Equity Builder that will go up to approximately $32,000. There's a middle one called Housing Our Workforce for up to $25,000, and a Lift Up Homeownership up to $40,000. So the Equity Builder is up to income levels that are up to 80% of the area median income. And this is why it's important to talk to a lender on the areas that you're looking at, because Quincy's area median income might be different from Milton, obviously. So we want to make sure you could qualify in one town but not qualify in another. So it's important we look at that pre-approval, and then I can kind of drill down to specifics on, hey, you might be eligible for the Equity Builder in Quincy, but you might be priced out in Milton. So then we'd look at the next one, the Housing Our Workforce, which is over 80% to 120% area median income so it's a higher level income, but a little bit less grant monies. And then the third one is if you are the first generation of home ownership, you may be eligible up to $40,000 in grant monies. So we've got 3 really great options, and you'd be surprised at the income limits. Toyosi and I were speaking about that earlier. They're not low. So kind of this will be one component of your pre-approval process to see if you would qualify for one of these. The main thing with the grant programs are they're not guaranteed funds. It's a first come, first serve pool of money, and you need an accepted offer to apply. So it's a great program. As you can probably expect, the monies go quick, but there's a lot of fallout too. Sometimes deals don't go through, so there's always kind of money hanging out on the side. So I always like to go in and kind of see if there's any monies and grab it if I can. If someone has said, hey, Denise, I got an accepted offer, are there any grant funds available? And, more often than not, there are, but it's not a guaranteed source of money for you. It's just, it would be an extra bonus for you to get some of these grant monies. But I've seen it happen, and I've worked with many borrowers that have been able to access these funds, and it's a great tool and great program to have. We have a lot of first-time home buyer options in our loan programs. You could qualify with as little as 3% down for your home purchase. You can use gift monies, your own down payments. You could put it together with some grant money. So there's a lot of different options we can work on for your down payment monies. If you have a borrower that's helping you, like a family member, they could be a non-occupant co-borrower. So that's something else that could help you qualify. And we have some other programs that would help you qualify for a reduced PMI payment, which is if you're putting less than 20% down, you would be required to have a monthly private mortgage insurance fee. So we have some programs that would reduce that monthly fee as well. Just some high level info, a pre-qual versus a pre-approval. You want to be pre-approved. A pre-qual is just a general conversation with a lender. They're not looking at your W-2s. They're not looking at pay stubs, bank accounts, your savings checking. A pre-approval is you've applied with a lender. We've looked at your credit. We've gone through the underwriting to see what you have for down payment. And most importantly, if you can qualify, which is your debt to income. So lenders have max debt to income ratios, typically under 50%. You don't want your mortgage payment to be over half of what you're bringing in to pay a monthly payment every month. You've got other expenses. You're going to have electricity, utilities, you're going to have food, and that we don't look at that piece. We're only looking at what your housing payment is going to be and if you can afford that. So it's important to budget what monies you have left over for those other things that need to be paid. And you also want to have some money for yourself. You don't want to be stuck at home tied to a mortgage payment and not being able to do anything. So I think that's the benefit of really getting pre-approved and knowing exactly what you can afford, what your max is, and maybe backing down a little bit from that max so you have some funds available for other things. But that's what a pre-approval really affords you to do. And Toyosi can support that. You need a pre-approval if you're going to make an offer. And
Yes.
just like I was, go ahead, Toyosi, I'm sorry.
I was just going to say, yes, you need a pre-approval to even, because that tells the seller that you're serious and not just shopping around.
Right. And just like I was just saying, other factors to consider: your savings, other assets you have. Maybe you have some 401k monies that you could take a loan from for down payment funds and not be penalized. I know you can do that with some companies' 401ks. So there's a lot of avenues you can consider. These are just some general mortgage terms you can look at your leisure, just so you're familiar with it. A lot of times the lenders kind of work with acronyms and you're like, wait a minute, I don't even know what that means. This is just some information for you to help you learn what these terms mean. Like loan to value, you'll hear a lot is LTV. It's basically a percentage of what the loan is compared to the value of the property. So you can kind of review that on your own time. The mortgage process is just very high level. You would make an offer. You would bring that accepted offer to me if you were pre-approved with me. We'd go through processing. So if you were pre-approved maybe a few months ago, I would just request some updated pay stubs and bank statements. And that would go back into underwriting. They would make sure you still qualify based on the home you're looking at, the taxes and insurance, because you have to remember when we're pre-approved, we're just using kind of estimated numbers. So once we get that actual property in, we're going to look at what are those actual taxes, and make sure you're still going to qualify. And I kind of touched base on this too. This is a little bit about what we're looking at when we're processing your loan. And at that time too, you know, I'll review all the loan options with you. We may have discussed one loan option during the pre-approval process, but once you actually have that property, you know, I'm going to look at the big picture again and see if there's anything else that in that short time that we've initially pre-approved you, you know, there may be a loan program that has come on board, or, you know, we're going to look at everything with fresh eyes again to make sure you're getting the best loan program. And these are just some pre-closing, closing items that you'll encounter. You'll need, obviously, homeowners insurance, the appraisal. We'll order an appraisal. And these are just the next steps to get on board for getting pre-approved when you're ready. And I think it's a joint combination of talking to your agent and when you're ready to take that next step is to work on that pre-approval.
Well, great. Thanks, Denise. I know like that was like pretty high level.
Yes.
But I hope folks found it useful. Rosalie, I see you have a question in the chat. You asked if it's possible to combine multiple grants.
You can't combine with this federal home loan program, but there are towns that have their own grant programs. You can piggyback on that, depending on what maybe that town is offering.